In this video, we'll talk about the easiest Asian range sweep strategy that will not make you tilt. And not making you tilt is really the key phrase here. Because probably a lot of you have tested out trading an Asian range sweep. But because it's on a lower time frame, because this happens quite a lot, and because it is not that accurate all of the time, you get on tilt and you throw it all away. Or you have no idea what I'm talking about and you're completely new to liquidity, to an Asian range, to a liquidity sweep, then this video is also for you. I will explain it in detail. I will hold nothing back. I do want to ask you to take notes, because if you don't, I think it can be confusing. But if you do take notes, you pay attention, it is super easy. Now without further ado, let's hop into it. Alright, so the easiest Asian sweep strategy that will not make you tilt. And this is a strategy that I came up by myself. Now, maybe it exists somewhere there in the universe, on YouTube, whatever it is. If it does, I'm claiming it, okay? I'm claiming it from now on. Now, actually, it is very simple and it is just a variation on an Asian sweep, but it is so mechanical that you just know what to do in every single scenario. There is no question left unanswered. There's literally nothing holding back, and not a single variation that can happen that I'm not talking about in this video. So literally everything will be covered. And this strategy I call the Dragon's Edge. And why the Dragon's Edge? I think it speaks for itself, as we will be focusing on mastering the Asia session. Now, before we go into this, and to show you that this actually works, this is a screenshot of when I was backtesting the strategy, because this strategy is basically a variation of my own and also a variation of an Asian sweep, right? So basically this is my strategy combined with an Asian sweep, but I have to say this screenshot was taken before this was refined. So basically what I want to do is I want to show you the strategy, I want to explain it to you, I want to show you some live examples, and then I also want to do a quick backtesting session with you to show that I'm not BSing. So right here we can see 158k over 4 months, right? We started with 100, so it's 60% return in 4 months. That's pretty insane. As you can see, around a 50% win rate, but I think we should be a lot higher right now. Or not a lot. I'm not gonna cap right here. We should be a bit higher right now. Now the strategy is refined and more in groups. You will see what I mean with this. The risk to reward is around 3. You will also see why that's the case. And then the monthly gain on average is 15%. If you ask me, pretty insane results. This is on FX replay, by the way. So these stats speak for themselves. Now I want to move into the strategy and I want to have a bit of a theoretical part first, because I'm going to show you the 3 main setups that can occur. So at first, we have the double close. And as you can see, we have some abbreviations right here, because this will be the double close bearish and the double close bullish, the DCBE and the DCBU. Now, what this basically is if you have Asia low, so let's say for example, the day starts right here, and then price is printing, and this is Asia low, all right? Price double closes below the low. So you have 2 bearish candles below the low. You can also have the opposite variation of this. That's a DCBU, all right? It's a double close above Asian highs. So let's say Asian high was right here. It's a double close above that. Then, so this is the first main thing that you will see occurring in the market. It's a double close. Double close you will often see in a very trending market where there is enough liquidity gathered the day before and it is just shooting up or shooting down. That's why we have that double close. A lot of times traders would say, Jody, I'm missing the trade because I'm only waiting for the reversal pattern. This will cover that. So double close to cover that. And what you will often see is you will see the power of 3 in the make during the week. Power of 3, for people that are not familiar with it, it is accumulation, manipulation, and then distribution, all right? The 3 phases of the market. Now, let's say, for example, this happened yesterday. It will be a big chance that today will be distribution. Will also be a big chance that you will see a double close pattern. Now, the second main thing that you can see, the main setup that can occur, is the close reverse. So in this case, you have the Asian lows. You have a close below, but the second one is a bullish close. The bullish close doesn't really have to be a bullish engulfing, so it doesn't need to be above this one. It can also be below, but it needs to be a bullish close. And I saw that I mix these two up because this is CRBU, because you'll be trading this one bullish, right? CRBU. Then you have the CRBE, right? Where you're trading up above Asian highs, closing above, but then closing aggressively below. CRBE. Now, the last pattern that you will see is the spike close. Spike close is when price comes underneath Asia low, spikes below, and closes above. Same thing with the SCBE, trading above Asia high, but closing below. All right? I hope that makes sense. Double close, close reverse, and the spike close. 3 main setups that can occur. Now, these setups, we want to see them play out on the 30-minute time frame. And now probably a lot of you are asking, why the 30-minute time frame? Why not the 1 minute? Why not the 5 minutes? We are trying to avoid tilt, right? And this one right here, it is a very sneaky thing that we're doing because we are forcing ourselves to be patient. And I think I will make my marker a little bit thicker. I hope you can read all of that, but we will force ourselves to be more patient because you have to wait for that close. Now, another very important thing that you cannot miss inside of the strategy is you want to see a 5-minute fair value gap form inside of the setup. So for the bearish patterns, you want to see a bearish fair value gap form. For the bullish patterns, you want to see a bullish fair value gap form. This can be in the first candle or the second candle for the setups that have 2 candles in them. So these two right here, the 5-minute fair value gap can form in the first one or it can form in the second one, okay? And by the way, in this one, you always want to see it form in the second one for obvious reasons. All right. Now the times that we're going to trade. It is very important to understand from which hours I'm looking at the Asia market. I'm looking at it from 11 p.m. previous day until 8 a.m. current day. This is GMT plus 2. This is my time zone. This would translate to 5 p.m. previous day until 2 a.m. current day New York Standard Time. If you are living in a different time zone, just use a time zone calculator and see what this is for you. I look for the setup between 8 and 10:30 a.m. GMT plus 2. So it is a heavily London-based strategy, but the fun thing is if it doesn't occur in London, 9 out of 10 times it will occur in New York. But still, I really love it on London. Alright, so more important things we have to ask ourselves. Like I said, I will leave nothing unanswered right here. I think it is very important to include everything, hold nothing back. So that's exactly what I'm going to do. Target and stop loss. Your take profit should be based on a previous high or low or a fill of a 30-minute gap. So previous high or low. So let's say, for example, we're taking our position and there's our stop loss, there's our TP, right? This is a bullish position. So we're assuming we're coming out of here like this and we have a previous high all the way up here. This will be your take profit, all right? Now, let's say there is a 30-minute fair value gap in here. Then you want to target the fill of that fair value gap, not the top. All right. Now I will come back to this in a second, and I saw I made a separate tab for this one, but it's the same as the take profit one. But what I wanted to add is that, let's say, because I'm saying, okay, you also need a minimum of 1/3 raised to a watt. Let's say this is just a 1/1.5. So this gap right here. But there is a huge 30-minute fair value gap right here. Extend your TP to the fill of that one. All right. You always want a minimum of 1/3 raised to a watt. And of course, if you're just going to do it like this and don't think anything of it, it will be very monetary based, but you want it to be market based. But what I've seen is that if there's a previous high like this, if there is a gap above there, it will almost always get filled if this gap has not been touched yet. So this is an amazing way to extend your target without doing any harm. Stop loss above or below the first candle of the fair value gap. So it is important that you remember that a fair value gap is basically a pattern consistent of 3 candles. A lot of people think that this is just a fair value gap. It is the gap, but to conclude the full fair value gap, you have to look at the whole pattern, and those are the 3 candles. So if you're taking a bullish position, stops underneath this one. If you're taking a bearish position, stops above this one. Now, candle close. Do you need to wait for the candle to close? The first 30 minutes, yes, because otherwise you don't even know which pattern you're trading in. The second 30 minutes, no. And I will come back to that in a second. And the 5-minute fair value gap obviously yes. All 3 candles. Remember, it's a pattern of 3 candles. Now, that second 30 minutes, let's come back right here. So if you see this one being formed and then you see, okay, price is moving up pretty aggressively higher, creating fair value gaps, that's enough. You can enter and it will 910 be this position. Same thing right here. Price is moving above this one, closing above, but then moving lower super aggressively and creating fair value gaps, enter. This one, if it keeps on creating fair value gaps in that same direction, you don't need to wait for the second one to close. This one right here, you're only focusing on the first 30 minutes anyway. All right. Now, I went my way and I went over the last 2 weeks on Euro USD on every single day. So I don't want you to go and say that I cherry picked this, because you can go look it up. And this is literally price action of every single day, with the exception of where there was no trade. All right. I will show you TradingView in a second. And every single trading day, I could categorize in one of the following categories. All right. So we had a trade that was a DCBU, right? Price came very aggressively above the Asian highs. And I want to show you the 30 minutes first, because this is where we will start. And by the way, now that I'm seeing these live results, I totally forgot to mention, you don't even need a daily bias, right? You just need to look for, what does price do when we break the high? What does price do when we break the low? And can I trade off that? That's the only thing that you need to do. Like I said, it is super simple, super beginner friendly. You just have to understand these principles, these setups, and study them. All right. So this is the Asian high right here. You should see Asian lows are untouched. Now, what does price do? It moves up very, very aggressively above. Now, this entry is false because this was taken during that first print of that candle. We cannot trade that. We at least have to wait until price starts creating this one. So it is on from 10.30, so it is somewhere here. So actually the trade that you could have taken was somewhere around here, right? Price again created a fair value gap. You could have entered off this one. Now we can make it a little less thick. Price created this fair value gap right here, and this could be your entry, right? Stops underneath this one, and you target a continuation. This one would not be enough for your trade, but I know for a fact there were a lot of highs up there. Now, I was not able to find a DCBE or a CRBU. All right, so let's move on to the next. We have a CRBE right here. First of all, the 30 minutes Asian high. As you can see, 2 candles, one bullish one, one bearish one. And now you're going to see what I mean with you don't have to wait for that close of the Senko candle, because during the second candle, you're most likely going to be creating that fair value gap. Right here, you've created the fair value gap. Where are you entering? On the close of the third candle. And this is something that I want you to remember, is that you're always going to be entering on the close of the fair value gap, unless you cannot get a 1/3 risk to reward. Then you want to enter on the pullback to the fair value gap. All right. Why do we do this? I don't want you to miss the trade and again, create some psychological issues for yourself that can allow you to go on tilt. And why do I want a minimum of 1/3? I see that it works the best, right? So then we just let it come back to the fair value gap and see what it does then. Stops above the high that creates the fair value gap. Now, I do like to play with it. Sometimes I put it above the wick. Sometimes I put it above the body candle. Now, I would say it doesn't matter that much. You will see me do both in this video. To be honest with you, I think putting it above the body candle will be even better because you can be out a lot quicker as well. Then the next one, price comes above, creates a CRBE, moves down lower aggressively. Again, what do you target? Or a 30-minute fair value gap, or previous lows, right? In this case, that was a 30-minute fair value gap, and this was enough to give you a 1/3 position. Don't be greedy. If you get a 1/3 with one of the two, 30-minute fair value gap or previous higher low, take that one, all right? If this would have been a 1/4, 1/5, it would also be the same case. We would target that one, 1/4, 1/5. So this was then the trade. Price created a very small fair value gap right here. I don't know if you can see it. I think you can. It's very small fair value gap, and we entered right here. This is a very good example of if I did not enter at this place, I would not have a 1/3. Okay, That's why we entered on the fair value gap. Now, last one for this one is a loss. So price moves above, CRBE right here. And as you can see, I'm keeping it transparent, right? I'm not cherry picking this. Price moves above, starts creating fair value gaps. So we enter, right? We enter. And this is right on the close as well, but it validates. So we enter right here. Stops above the high, and we take the position lower. All right? Right here you might ask, why did you not target the fair value gap? Because it would not give me 1/3. Okay? And that is something, like I said, it is maybe a bit monetary based, but it will make you a lot of money in the end. Now, SCBU. I really like these ones. So as you can see right here, we have Asian lows. We have a tap below. And then right here, we start printing fair value gaps. Okay? Price moves lower into the fair value gap. Again, I did not enter right here because my stop would be huge. Okay? Actually, when I'm looking at the numbers, it would not be that huge, but I was like, okay, we can definitely get a better entry right here. So that's why we took it, right? And then I targeted probably continuation on this one. As you can see, there's a lot more than 1/3, as this one was also refined, right? We took it on the fair value gap and we targeted range liquidity. Now another one right here. And basically when you're looking on the 30-minute, you're looking at it until that 7:30 candle, this one, is closed. So in this case, this is the last one that is closed. Price steps below it and you see it moving away, right? Again, in this case as well, it would not have been a good enough trade if it would enter up here. So entry was here, stops underneath the candle that created it, targeted a 1/3, was just around these highs. Now, the SCBE, all right? Asian highs, wake, we wait until the fair value gap is created. It's all the way down here. What can we do? We can enter right away. Stops above the candle that created it, and we target a 1/3, and a 1/3 was this low right here. So price is here in a downtrend, and it is expected for price to take out this low. So this is exactly what you can target at this place. That's why it didn't matter to me that this stop loss was also around 20 or 15 pips. And there is no maximum of a stop loss, by the way, on this setup, but usually it's going to be between 5 and 15, something like that. All right, sweep. We wait for the first fair value gap to form. It's exactly right here. This one should actually be enters right here or inside of the fair value gap. Stops above the high, and we target a continuation lower. This one as well. This one was a fill of the fair value gap, right? Could be a full continuation lower, but a fill of the fair value gap gave that 1/3 already. Then right here, we don't have a 30-minute of this one, I see, but we have a sweep. We have a fair value gap. We enter on the third candle, close, and we target a 1/3. Last but not least, fair value gap. We enter on this one. I think that is the same one that we had right here. Yes, it is the same one. All right. So then I want to talk to you about a little variation that we do have. So we have these three main setups, but we do have a little variation there. We have a hybrid variation of these two. All right. A hybrid variation of these two. So the hybrid variations are the spike close reverse bullish or the spike close reverse bearish. And you guys are going to see it as a spike right before that close reverse. And I now see that actually this one is an incorrect example because this is just spike close bullish, right? Spike underneath, fair value gap, you enter 1/3. The lows are actually these lows right here. As you can see, these are Asian lows, right? This lowest point right here. So this is the first time that it comes underneath, gives a fair value gap, and you enter right there. But I do have a good example of the spike close reversal. So as you can see, we have a spike and we have a close reverse. Okay, so this is spike close reverse where we have a both. Now what you want to see is again look for that fair value gap. No fair value gap to see right here. So you wait for the first bearish one to come, and bam, that's where you go, right? This one in particular had no entry, as I found it to be a little bit large to take your entry right here. And I also targeted the fill of this fair value gap, but this is a very good example of the hybrid. Now let's hop into FX Replay and show you a bit more examples before we wrap this up. Okay, so right now we're on FX Replay and let's start a new session. So what we want to do is we want to trade the Dragon's Edge. And let's call this YouTube so that we know, okay, this is this session. Then let's trade 100K, as this is what we're usually doing. And also, we're gonna do this on Euro USD. All right. Initial date. Let's just start at the beginning of maybe this year so that we know, okay, this thing works, right? Now, first week of January will not be probably that great of a week to trade, but let's see. And then all the way up to now. All right, so we're here. Now, what we want to do, we want to go to a fresh London session. There we are right now. Then on the 30 minutes, we're going to mark out our highs and lows. So highest points, our lowest point, as you can see right here, very nice double bottom, right? And I know I said I don't really need daily bias, but I do like to look at it. And this is just me being obsessed with the charts, trying to see what they really want to do. And I do think there's a lot of liquidity underneath these lows as well, right? Not really something that we will use inside of the strategy, but if you can, by the way, if you are good at daily bias, if you know what you're looking for or you want to look for on a daily basis, use this to your advantage and filter out the higher low that you don't want to see get broken, because then your win rate will be a lot higher as well. Now, we have to wait for what price is going to do. Let's sit on a 30 minutes because we want to see that one close. All right, no trade for us as we're only trading up till 10:30 a.m. So that's this candle right here. Now, you can wait for what New York does or whatever it is, but this one just moves further. So let's go to the next London session. That is this one right here. Let's mark out the low. Let's mark out the high. It's the one that it is printing right now. All right, so we have an SCBE right here. We have a spike, close, bearish. Let's go and sit on the 5 minute and see if we have a Fairvalue gap, which we don't at the moment. As you see, we also move higher. Now, let's see, maybe it's the variation of this. So we have a spike. We have a close above at the moment. We do want to see that second candle as well. So what we can do is we can go sit on the 5 minute and see if we see a 5 minute Fairvalue gap bearish. There we have it. It's still in play. It's still inside of our session. So let's take the entry right here. Let's put these stops above the high and let's give it a bit more room. That's something that I like to do as well. You can put it straight on that high, but I do like to give it a bit more room sometimes. Now we want to see if we can get a 1/3 out of this. The first obvious target would be the Asian low, but it's not really doable. The second obvious target would be a 30-minute Fairvalue gap, but there is none. And the third target will be basically just like in a 1/3 targeting these lows, which will be a full continuation lower. I don't say it is impossible. Definitely don't say that. But I do think we could see a pullback. But before the pullback, we might see a grab first. So yeah, who knows? Maybe it is possible. Let's just take the entry. I don't really have my hopes up for this trade, but let's just take the entry and let's see what it is going to do. All right, yeah, as we see, it is moving up higher. It has been going so deeply to the downside and price wasn't really looking that great for that. And it was just a mess right here. So that's a loss. That's totally fine. Let's go to the next day. And it's the end of the week, by the way. All right, right here. New London session. Highs and lows. Let's skip on the 30 minutes. All right, so for now we have a close above. Let's see if we can get a 5-minute Fairvalue gap to the downside, which we do not get right now. We do have a double close. Yeah, we do have a double close above right now. So we're looking at a DCBU. Now, what we want to see is we want to see a continuation of that. And basically, I like to take this off a Fairvalue gap, but this one has been tapped in already. And right now, there is no real current one. All right, so here's a current one. What we can do, we can take the entry on here, stops underneath the low. Now, let's see what can we target. We have an OB right here, but we can target these highs, perhaps. That could be. There's already 1/4.5. Wow. Let's see. Maybe we can just play it safe and target a 1/3 right in the middle of this playing field, this order block right here. Let's place the order. This is gonna be a stop order. No, it's gonna be a limit order, sorry. And let's save. Let's see on the 5-minute what happens right here. All right, okay. Very nice targets right here. It also almost came down to stop loss afterwards, and then it just shot up higher, taking out all of these highs. Very nice. Like I said, this is what you see. If it is a very trendy market, you will most probably see a DCBU or a DCBE. Let's go to the next London session. We're up 2% at the moment, so that's good. We still have that 50% win rate, just judging off 2 trades, but that's fine. We have our high, we have our low. Let's see on the 30 minutes. Bam, we have it going very aggressively higher. Probably we want to see a 5-minute fair value gap somewhere in here, which we have already, so that we can take that continuation. So I'm going to judge it off this fair value gap. We do have a lot lower down here, by the way. That's something that we didn't have right here, right? All these fair value gaps, not all of them, but they were filled. And I do like it to see that it is filled. We're trading above, creating a double, again, a double close bullish right here. And this is now a bit of a two-phase that you're going to have, right? Because are you going to take it on this one? The pros are, okay, you're not going to miss a trade most probably because it is a very quick tap-in. But for it to be a good trade, your stop loss really should be underneath here somewhere. Or are you going to wait, but fear of missing the trade? But I'd rather fear the trade at this place than I risk another percent, right? So what we can do is maybe we can take it on here. And why on here? Because right here we have double confluence, right? We have a previous high and we have our fair value gap. So what I would recommend to you is if you have the choice of multiple fair value gaps like this in a move, take the deepest one, or at least some of the deepest ones, and cover off the rest. So this one as well, we're covering up the one that is lower right here, okay? Now, a 1/3 target will also be a lot more reachable at this place, as now he will be not even taking out this high. And I believe, definitely if you would take it here, you need to take out that high, okay? So let's see if we're gonna miss a trade and feel stupid afterwards, but that's fine, we protected the capital. Or if we are going to be tapped in. Oh wow, now they made me look fake, right? But perfect tap-in, and this is what I often see, especially on EU, is that it taps in on previous highs so beautifully. If we combine this with a fair value gap, whatever it is, amazing trade, right? Amazing trade. Okay, we're up 5%. Let's go to the next London session. Again, let's check the 30 minutes and see how price failed to break that high. Wow. Lows, highs. Let's see what price is doing. All right, it comes below very, very aggressively. We want to see a bullish fair value gap so that we potentially see that close reverse. Not really. We do see bearish fair value gaps constantly. So we could say at this moment that we're seeing a double close bearish. All right, a double close bearish. All we're going to do is we're going to enter this one. I missed these opportunities right here. So I'm basically going to take a position right here and put my stops above these highs. Now what we're going to target is, let's see if there is a 30-minute fair value gap of some kind. We are trading in a 30-minute fair value gap at the moment. That is interesting because I don't like that. But still, let's risk it, right? Let's risk it. We have a DCBE, so it should be a good sign that's probably not really going to respect that one. 1/3 is all the way down here. There's no really a 30-minute fair value gap. There is a previous low though, right here. So I'm going to target that one. I'm going to place the order. This will be a market order actually. I don't like it to be a market order because I'm still doubting about that 30 minutes. You guys can see a bit of my thinking process right here. But I like it to be a stop order at this place. We have the room as well. We have the room. Because now if it moves up completely from here, we might have dodged the bullet. So let's put a stop in. Okay, it moves down directly almost. That's good. Wow, beautiful fall. Beautiful fall. And an even more beautiful stop loss. Or take profit, I would say. I like these. I like these. Let's go to the next London session. It's a Thursday. Let's go to the 30 minutes. Let's paint the high and the low. By the way, I'm going to do like one or two more and then probably call it a day. I think you get the hang of it. I would say backtest yourself because you can look at me doing it, but it will not give you a real skill. I hope it will give you proof of concept, and that's something then. Now again, pretty bearish scenario. So you want to see a DCBE or a CRBU, right? We have now a close below. So you want to see or a bearish value gap or a bullish value gap so that we can continue this. See how there are no value gaps printed that are bullish? They're constantly like closed. Now there is one. Now there is one right here. Let me see. How's the 30-minute looking like? All right, it's a CRBU. Let's take this one. Let's take this position higher. And even though I am very bearish on this one, let's just see what it can do. Now, can we take it from here right away? We probably can, but do we have a good target then? Not really. I actually want to be out above the Asian highs. Oh, wow. So if we take the fair value gap, we would be out above the Asian highs. I'm going to target this 1/3, but if I see it stalling here and if I'm in actually, then I'm probably getting out there. Limit order. See how it came up here and is shooting down lower. I'm going to be putting this on break even. Yeah, that was a good call. That was a good call. And now the reason I did this, because I'm super bearish, right? I'm super bearish and I did not trust the position. So I think that's a good management that you can do when looking at these trades. To finalize this, let's do one more, right? Let's do one more. It's going to be on a Friday. I usually see that this doesn't work that well on a Friday, to be honest with you, as Fridays are usually continuations of Thursday. But let's see. To be honest with you, I think this one was a spike close. You see this? It spiked below. Wow. I cannot believe this. What a mega trade. What a small spike. That's so funny though. All right, maybe we can get a double. That's so funny though. Okay, so this one is taking this one out. I do want to see spike close. Let's finish this 30 minutes. Bam, spike close above. That's a double spike actually. And we have a value gap. So it looks pretty good, right? It looks pretty good. Let's take the entry. We can put our stops above the high. Now, reason for me looking at this and taking, okay, maybe we can take a limit order is because we already have a bullish candle right here. Let's take the continuation lower. It's going to be a 1/3.4. Do we have a 30-minute fair value gap in between? We do have a couple actually, but it won't give me a 1/3. So we have to target the continuation anyway. Let's place the order. It's gonna be a limit order actually. Let's look at it on a 5. All right, we're tapped in. We're consolidating. I don't like this. I definitely don't like this. Ooh, okay. See how we stayed in with like 0.1 pips. By the way, in real life, this wouldn't be the case. You would be stopped out 100%. And then a news, wake 14:30. NFP was. I was thinking. I was seeing this. Consolidate, and usually this happens before NFP, right? NFP non-farm payrolls every first Friday of the month. And I was thinking to myself, okay, 10th of January, it can't be because NFP would have been the week before. But probably with the New Year's, They postponed NFP to the 10th. So that's why this happened, and that's why this happened. You can't trade both scenarios. You probably would not have stayed in right here. You probably would have, I don't know, liquidated or something, or they would invalidate your payout because of this. But in backtesting, it works really well. Now let's go to the analytics real quick of what we have done right here. We're actually at an 80% win rate, but of course we only have a very small batch of 6 trades. We were able to make 11%, 11.5% over 4 winners and 1 loser. So that's exceptionally good. All of our trades were taking at the 8 a.m. mark. One of them was at the 9 a.m. mark. The only loss that we took was on Friday, and the other ones were winners. So basically this would probably be half your yearly salary if you work in a minimum wage job and you're trading 100K. So I would say give this one a try out yourself. Backtest this very thoroughly and let me know what you think of it. All right. I hope you guys enjoyed this video. I hope you learned something from it, and I will see you in the next one. Bye bye, guys.